China's stock market, a headache for the world, a living hell for investors. Just imagine. You wake up in the morning, switch on the TV, and see red lines crashing on the screen, stocks tumbling, and crowds of panicked investors. Some are pulling their hair out, while others are wringing their hands over their last savings. Chaos is everywhere. And this isn't the scene of some small nation, but of China, the world's second largest economy. A stock market with a total size of $11 trillion. Nearly 850 lakh crore. At first glance, it might seem like a gold mine. But the reality is that for investors, it has become a place where hopes are crushed, dreams shatter, and money turns to ashes. That's why people have started calling it hell. Today, we'll dive deep into this subject. But before that, if you're new to our channel, please don't forget to subscribe so you get updates of all our latest videos first. So, without any delay, let's begin today's discussion. First, let me tell you, China's stock market has been on a strange path since the very beginning. While in countries like the US, stock markets became a source of wealth and prosperity for investors, China turned it into a tool for the government and companies to raise money. This very mindset slowly became the biggest flaw of its market. The companies listed their focus mainly on implementing government policies and raising finance for themselves, but investors' interests were never given priority. This is the reason why China's stock market could never become a fortress of trust for investors. Years ago, when the bubble in China's market burst, millions of investors were ruined. People had mortgaged their homes, even put their pensions into shares, but within no time, everything was wiped out. That period completely changed the psychology of investors. Since then, Chinese investors have seen the stock market as a dangerous gamble. They begin calling it a minefield, where the moment you step in, an explosion can wipe out your hard-earned money in just seconds. If we compare it internationally, the picture looks even more alarming. A Bloomberg report showed that if someone had invested $10,000 in America's S&P 500 index 10 years ago, today it would have grown more than 3 times. But if that same money had been invested in China's CSI 300 index, the investor would have gained barely $3,000. This difference is not just about numbers. It reflects the contrast in policies and attitudes toward investors in the two countries. America gave its investors trust, while China repeatedly disappointed them. Today, China's stock market has become a nightmare for investors. People say that investing money here means throwing money away. Just imagine how strange this is, the world's second largest stock market, where companies get listed, IPOs are launched, yet for people it ends up being nothing more than gambling. You invest in an IPO, and a few months later, you find out the company has been delisted. Those who invest with dreams in their eyes end up trapped in a swamp of debt and despair. In 2022, China became the world's largest IPO market. On the surface, it looked like a huge success, but the reality behind it was terrifying. There was a flood of IPOs. Companies raised billions, but many of those companies later collapsed. Their share prices crashed to the ground, leaving investors bankrupt. Imagine a market where an IPO doesn't mean success, but instead represents fraud and destruction. That is why people have started calling it the graveyard of investments. The Chinese government is not unaware of these conditions. President Xi Jinping knows that if people don't invest, the pace of the economy will stall. He wants to boost domestic spending. He wants people to take money out of their pockets and put it into the market. But the real problem is that investor confidence has been shattered. People are afraid of investing. They are cutting down on spending and focusing only on saving. As a result, consumption is falling and the country's economic activities are slowing down. China's tech companies need massive investments to grow. In artificial intelligence, electric vehicles, and high-tech sectors, China wants to compete with the US, but the big question is, when ordinary investors don't have any trust left, where will the money come from? No matter how many reforms the government introduces, Until investors are convinced that their money is safe and will bring returns, the situation is unlikely to improve. The biggest failure of China's stock market is that it has never prioritized investors' interests. Especially when government-owned companies get listed, their real purpose is to follow government directives, not to protect shareholder value. In such an environment, investors feel cheated. And once the sense of betrayal deepens, the entire system gradually loses trust. This is why even foreign investors have now started distancing themselves from China. The impact of this situation is not limited to China alone. China is the world's second largest economy, and when its stock market stumbles, the shock waves are felt worldwide. When foreign investors pull out money, it affects American and European markets as well. Instability spreads across other Asian countries too. Even nations like India feel the effect because foreign investors often withdraw money from one country's portfolio and shift it to another. In short, China's stock market has now become a headache not just for the Chinese, but for the entire world. Still, the question remains, will there be a solution to this problem? The Chinese government is trying to bring reforms. IPO rules are being modified, companies are being monitored, and plans are being made to attract investors. But experts believe that until the fundamental mindset changes, nothing will improve. Real reform would mean prioritizing investors, giving them confidence that their money is safe. And until that happens, China's stock market will remain nothing less than hell for investors. Just think, on one hand, there's America, where investors grow wealthier year after year. On the other hand, there's China, where investors live in constant fear. This difference is only because of policies. And that difference is China's biggest challenge. If it fails to understand and address this challenge, in the future, its stock market could prove to be the world's biggest
Taught you
headache.
something new. Do not forget to like and share this video so that this information can reach others as well. Your likes and shares are a source of inspiration for us. If you have any questions or suggestions, please let us know in the comments. It will be our honor to answer your questions and listen to suggestion. And yes, if you like our content, subscribe to the channel and press the bell icon so that you stay connected with every new story. Thank you. GRT Business YouTube channel sources, news from various news agencies, opinion polls and other public sources. We try to ensure that every report and summary is accurate and verified, but we are not responsible for any dispute or error. Our aim is only to provide you with accurate information.